Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, glad to be back.
John, gold took a hit this week. It dropped it below $1,300, but Midas Gold, whose Stibnite mine in Idaho is sensitive to the price of gold, it's held its gain from last week. Why is Midas Gold holding up in the face of gold price weakness?
Let me address first this annoying question about the weakness in the price of gold. Gold has been weak in the last while because the U.S. exchange rate, the U.S. dollar, has been charging up against emerging market currency, against the euro, partly because the interest rates in the United States are expected to keep rising, continuing the trend from last year towards normalization, which of course makes the U.S. dollar instruments, bonds and that, more attractive than gold because gold does not pay any yield. But the other reason is that the America First policies that Trump is pursuing threaten to completely disrupt a global order of a rules-based world economy. And the concern is that the trade war he is trying to unleash and all this geopolitical turbulence that he's stimulating in the Middle East is all going to result in disruption of supply chains that are very much interwoven. It's going to be a be careful what you wished for type of situation. Even American companies are going to find that they can't produce certain products because some components are coming from China or somewhere else. And the fear is that we're heading into a global slowdown in the economy. At the same time, we have rising interest rates. We have a backdrop of the Middle East having the Shiites and the Sunnis get stirred up again by pulling out of the Iran nuclear agreement. Trump has basically left Iran on their own, boxed it into a corner. Europe is forced to pull out because its companies, if they don't, will get sanctions against them by the United States. And the pressure cooker has also been built up by the decision to move the embassy in Israel from Tel Aviv to Jerusalem. The Saudis had pretty much sort of forgotten about the whole Palestinian issue, but now it's back in their face. Now they need to deal with the ordinary Muslims, be they Shia or Sunni, getting worked up about what's happening to the Palestinians in Israel. So the whole Middle East is being set up as a tinderbox. Even with Pakistan, the United States is now having a problem. Pakistan has just banned travel by American diplomats in Pakistan. And of course, Pakistan itself is a nuclear power. It is primarily Sunni, though it also has a Shia population. And it, of course, continues to be a source of much of the Taliban problem that continues to plague Afghanistan. And in Iraq, we now have Sadir making a comeback in the running to become the new leader of Iraq. And this was the key enemy of the United States back in the early days of the Iraqi invasion. So all of this is going to be bad for oil in the sense that we could see significant supply disruptions. We can also add in Venezuela, which seems to be imploding, and their oil production is going down. So $100 oil, it's already over $70 in WTI and higher in Brent. $100 oil is realistic. This may suit Trump fine because higher oil price is great for the shale oil business in the United States. However, the shale oil producers are not getting the higher oil price. There is a pipeline capacity problem that won't be solved until 2020. So we're going to see inflation rearing its ugly head, and also inflation caused by all this trade protectionism coming in, all of which will encourage interest rates to be pushed higher to subdue inflation down the road. All of this is working against the price of gold going higher, because if we have another financial crisis like in 2008, gold was sold because there were buyers for it. There weren't buyers for any of these other debt instruments, but there was for gold. And we're seeing this weakness in gold almost in anticipation of all this stuff going wrong for the global economy. Now, interestingly, what kept Midas Gold up in the face of all this is that last week Barrick agreed to buy $49 million Canadian worth of stock at $1.06, and that gives it 19.9% of the issued stock, but that's actually not the real number. It's more like 12% because of the $390 million fully diluted stock. There is a $55 million chunk of zero coupon debentures that are convertible at 35 cents, which was taken down by Paulson and Company in 2016 when a decision was made. We're going to push this through the permitting cycle, which the company now thinks they could have a permit in hand by early 2020. This is based on having an environmental impact statement filed by the end of this year, and then a year of all the commentary, record of decision made at the end of 2019, and then the final approval early 2020. Now, last week I published a Spec Value Hunter update on Midas, in which I sort of recrunched the numbers from the 2014 PEA, and one has to ask oneself, well, at $1,300 gold, even with the new 21% federal tax rate, the IRR is good, internal rate of return, but the after-tax net present value is below $1 billion, even at 5%. And a key rule of thumb in making a production decision is that the after-tax NPV should be equal or bigger than the CapEx, which is expected to be $1 billion based on the PEA, and I'm sure it will be higher by the time the feasibility study is completed. So you ask yourself, why is Barrick making this investment now rather than just wait for this crisis to happen, for gold to slump, for Midas to become lower priced in the face of maybe gold slumping to $1,100 or something like that? Well, the answer will be that Barrick is looking beyond this interim weakness in the price of gold. One has to think back to 2009 when all the measures were taken to turn around the results of the financial crisis, and gold went into a rally up to $1,900. The policies that Trump is pursuing have the medium-term consequence of displacing the United States from the role it is trying to assert. It's the opposite effect of what is intended. As the rest of the world learns to deal with a bully that's decided to be explicit about being the most powerful force on the planet and starts working around the United States will become isolated. It will accelerate the marginalization of the U.S. dollar as the world's global single reserve currency, and that can only be good for the price of gold. So Barrick has stepped up right now at $1.06 because it can see a production decision window or decision in early 2020. And when you do the numbers on the 2014 PEA assumption, $1,600 gold puts the project way in the money. That's only $300 higher from the current level. And if you believe that all this mess being created with regard to the global order is going to continue unabated until Trump gets kicked out and the Democrats come back in which case the gold bugs are going to be happy again because they can complain about how the Democrats are responsible for all the problems. It's hard to imagine gold not being significantly higher than the current price. And Barrick has lots of experience with refractory ore in Nevada. Its rival is Newmont, but Newmont is a much more sluggish company than Barrick. When it finally moves, it does stuff like pay $2.3 billion for a future mine that cranks out 100,000 ounces a year, vastly overpaying. Barrick is making a strategic decision right now, placing a bet that gold is going to be stronger by the time it arrives to come up with $1 billion. And that's the reason Midas Gold has held up. The audience that understands what the Stibnite project is all about, they know that even if gold goes down in the interim because of a mess created by Trump's policies, it's going to end up a lot higher down the road. And this is one of the best optionality plays. When I crunch the numbers, if gold is at $1,600, the after-tax NPV suggests a stock price range of $3 to $5 for Midas Gold, representing either a 5% or discount rate. So the stock has held its gains because it is now more than adequately financed to deliver a feasibility study and a permit by early 2020.
We'll have more with John Kaiser right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with John Kaiser. John, Osisko Mining dropped sharply this week after publishing a new resource estimate for its Windfall Gold project in Quebec. What did the market not like about it?
Well, you have to ask yourself, what didn't it like about it? They nearly doubled the gold resource for Windfall from 1.5 million ounces in 2014 when Eagle Hill had the project. They now have 2.9 million ounces. Unfortunately, the grade dropped from 8.4 gram per ton to 6.9 gram per ton, which at the current gold price is worth $350 for the older, higher grade, $288 per ton. Not that far apart, and it should be high enough for underground mining, but one has to keep in mind that when they did the PEA in 2014 for the older, smaller resource, the project was not viable at $1,200 gold. So you're wondering, one has to wonder if at a lower grade it will be viable today. The company will be working on a PEA, which they hope to publish in the third quarter. They plan to truck the ore to La Belle-sur-Quévillon, where they also have the Osborne Bell deposit that Mont-Or at one point had. It has about 400,000 ounces of ore not very far, so they can blend all that. But what kind of bothers the market is that they have spent $143 million to grow this resource, double it, but 80% of it is still in the inferred category, and it's based on 600,000 meters of drilling, and there's another 200,000 meters underway this year. But you kind of wonder, well, with a PEA at 35% error margin, and how do you get to the 10 to 15% accuracy of a feasibility study? How much more money is it going to take to deliver a proven and probable resource that will be developed for the Windfall project? And the market had a similar reaction to Barkerville Gold Mines several weeks ago when it published an updated resource for the Caribou project in British Columbia. Now, they delivered 3.7 million ounces at 5.6 grams per ton, based on $100 million raised in the past couple years since Eric Sprott kicked out Frank Callahan and refocused the company with a similar sort of brute force exploration strategy, and unfortunately, it's the numbers a lot smaller than the 10 million ounces that Peter George came up with in 2012 in a resource model that was heavily criticized by the industry, and which eventually was ditched and replaced by a much more conservative resource model. But similar kind of disappointment. So much money going into projects. It is using up the pool of capital available for the exploration, sort of pre-economic study type of work in the space, in the junior space. It is clogging the assay labs and using up resources, and it's not delivering what the market wants to see. It wants to see that if you come up with good geology and put a lot of capital to work, you will deliver something that really works at the current metal price. What Osisko delivered with Windfall and what Barkerville has delivered with Caribou, it's not so obvious that this amounts to something that is worth being developed today. And Osisko, which was for a while a poster child for this idea that all it takes is smart geologists and a lot of money from people like Eric Sprata to deliver success, now they've become an anti-poster child for this line of thinking. And it's coming at a time in the market where there is shrinking audience, shrinking risk capital available for exploration, which the capital continues to be sucked away by cannabis and blockchain type stories. And there is this cloud hanging over the market that even though gold should be going higher, and of course gold going higher would do wonders for these projects, in the interim we are probably going to see a lower gold price. So the market's reaction is justified because with all that capital that went into Windfall, we should have seen something better than what was delivered.
We'll have more with John Kaiser right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Eskay Mining announced a $1.1 million financing last week, part of which will be earmarked for its 100% owned quarry property next to Garibaldi's Nickel Mountain project. Isn't Eskay Mining supposed to be looking for another Eskay Creek deposit, at which today's metal prices you would believe would be a prize worth $3 billion?
Just to sketch in some background, the SIB project sits inside the Corey project, which is just south of the former Eskay Creek mine, which was shut down in 2008, operated from 1995 to 2008, was one of the richest mines ever in Canada. And if you ran the numbers, the resource that was mined out today, that indeed is a project would be worth $3 billion. SSR Mining last year optioned 60% of the SIB claim because that is the southern extension of the Eskay Creek trend. A lot of work was done on the original Eskay Creek property right up to the SIB boundary, and there doesn't seem to be much hope that there is anything left to be found. But in 1991, the juniors that had the project found the Lulu Zone, which was mudstone-hosted high-grade gold and silver mineralization, very similar to what was in the Eskay Creek deposit itself. So there is this belief that south of the original Eskay Creek deposit, there is another VMS system similar with a significant gold-silver overprint, and it's just a question of finding out where in this tilted and folded stratigraphy another similar $3 billion prize remains to be found. And Carl Edmonds, who runs the program for SSR mining, which used to be called Silver Standard, he was part of the program that explored for Homestake the southwestern projection of the Eskay Creek stratigraphy. So he has a pretty good understanding of what's going on there, and he saw last year a chance to find out, test this theory that this Coulter Creek thrust, which moved the rocks from east to west, basically detached them, and the hypothesis was that the Lulu zone, where follow-up drilling never found any real extent to it, it was just like this tip of an iceberg with no iceberg anywhere in sight. He came up with the idea of let's step to the west and drill a series of holes in the footwall, spot them in the Bowser Lake sediments, which are completely worthless, and drill underneath the thrust fault to try and map the stratigraphy in a way where you can connect it all and start seeing where the lens might be. And they drilled 12 holes last year, and they did not really find anything resembling the Lulu zone. They did find smoke confirming, yes, this is the right setting, this is Eskay Creek type pathfinder elements are here. And what we had hoped for after they spent $3.7 million last year, that they would have some targets in sight and start trying to track down the location of the iceberg somewhat east of the Lulu zone where it is in the hanging wall, and basically start drilling blind to snag this second Eskay Creek system. Instead, they are spending another $4 million this year and moving to the west and to the south of the area that they drilled last year. And this is interesting. It tells us that that area underneath the Lulu zone does not host the iceberg. But what they also learned in the process of drilling these holes is a better understanding of how the stratigraphy behaves, especially to the west. And they are moving over into the Bowser Lake sediments, which are younger rocks that sit on top of the prospective Salmon River Formation. They're doing a geophysical survey of some sort, which apparently can filter through the graphite that's in these Bowser Lake rocks, creates a lot of EM anomalies, and therefore very difficult to find the EM anomaly, the conductive zones that are associated with a proper VMS deposit. And they will be looking in an area where nobody has ever looked, and it's basically a byproduct of the risk that they took last year with that program, opening up a part of the SIB property where nobody has ever looked. And it'll be really interesting to see if this geophysical survey lights up some targets that could turn this year into the one where SSR makes the big discovery we hoped they would make last year with their approach of drilling shallow angled holes underneath the thrust fault. Now, this last year you had to sit back, and I made Eskay Mining Corp a bottom fish recommendation, and you were basically at the mercy of whatever it is that SSR accomplished on the SIB claim. And the market was weak last year. It's weaker this year even. But this year the company bit the bullet and said, we are going to do a financing, a flow-through component at 30 cents and a hard dollar component at 25 cents, raise $1.1 million, and allocate about $300,000 for doing geophysical surveys and prospecting in the western part of the Corey property. And that western part includes west of the SIB claims and farther south all the way to a zone they call the Red Lightning, where drilling by the previous operator intersected magmatic nickel sulfides, not high enough grade or with enough continuity to be worth following up in its own right, but it has a linkage to all the fuss with Nickel Mountain next door. Now, Nickel Mountain has a deposit called the E&L, which was discovered in the 60s by Silver Standard. It was explored into the 70s. There was a resource estimated of about 2.9 million tons of 0.8% nickel and then copper and some PGM credits. Not high enough to justify developing as an underground mine. Silver Standard let it lapse a few years ago, and the underlying owner or somebody else got hold of it and optioned it to Garibaldi Resources, which brought on board Peter Lightfoot, who is a nickel expert, and they looked at all the data and they did some geophysics on that, and they said, this gabbro intrusion with its magmatic nickel sulfide mineralization, the tenor is very, very high, which is unusual, and tenor means the percent of your target metal like nickel relative to total sulfides. But this is not supposed to be the right setting for creating Voisey's Bay type deposits or Kambalda or Thompson nickel belt type deposits. And so the market's always been skeptical. Silver Standard never really followed up. And by the way, there is some irony that 10 kilometers to the east, SSR, which used to be Silver Standard, is searching for an Eskay Creek deposit, while Garibaldi, backed by Eric Sprott, and the company has about $25 million in the treasury following a recent $13 million financing. They are going in there to prove that Silver Standard was wrong in abandoning this story in the late 70s. And what Peter Lightfoot has come up with is a theory that, although it's not like these classic settings that host these big nickel deposits, it is very similar to the Central Asia orogenic belt, which has some very high-grade nickel deposits, as well as a very large Jinchuan billion-ton, 1% nickel deposit. And this thing is not just an anomaly here. If this is real, there's going to be more of them, and they're going in there. They're going to Swiss cheese this system. Lightfoot believes that there are multiple pipes and puddles of high-grade nickel within Nickel Mountain, which this year's work will either find or it won't. It is unlikely to have a big, large Voisey's Bay style ovoid of 30 million tons of 4% nickel and 3% copper that's open pitable. So they will need good continuity and high grades to support an underground mine in this area. You're not likely to create an open pit in this area with all these rivers flanking it. And Eskay Mining has taken the view that if this is not a bust, it is because it has district scale implications. And this western part of the quarry, where past stream sediment sampling has picked up nickel and cobalt values, but never really had any serious work because there was no model to justify seeking a nickel prize in that area. They will have generated information, geophysics information, that if there are targets in there and Garibaldi is not a bust by March PDAC next year, as Brent Cook has predicted it will be, then there will be interest in the area play surrounding it, and the Quarry project is very well positioned to get that sort of glass half full interest when one starts to believe that there is something real. So right now, the market's not really, except for Garibaldi itself and to some degree Metallis Resources to the south of Nickel Mountain, the market's not assigning any optimism, any premium to Eskay Mining. It's basically trading as a bet that SSR will come up with an Eskay Creek style discovery this summer. So one can get an indirect play on Garibaldi, where if Garibaldi is a bust, there are no consequences for Eskay Mining. But if it is a success, confounding all the skeptics out there, then it will have a spillover effect for Eskay Mining. And with 100% ownership of this area, with new information about what's going on underneath these Bowser Lake sediments that obscure everything, that could be an alternative to having an SIB success this summer for the stock delivering or becoming much more popular in the eyes of the market.
John, thank you so much for the update.
You're welcome, Jim.
I've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of How Street Media Incorporated.